Hi, this is Rachel Marshall, bringing you another money secret. And here it is. You are the best financial advisor that you'll ever find. Yes, you absolutely heard me correctly. You are the best financial advisor you'll ever find. So, probably never heard that before. Let's break it down. Robert Kiyosaki says this: there's a difference between being rich and being financially free. So when we look at the person who has all the money that they could ever want, and they have the nice house, the nice cars, the nice vacations, the nice clothes, we think that they're financially free. But all too often what happens is that that person is just living from one large paycheck to another large paycheck. And should that next large paycheck not be there for them, they would be broke. And that's not the position that anyone wants to actually be in. We want to be financially free. So while that might be less attractive or less flashy, financial freedom simply means that you have income from your assets greater than your expenses, and you know that this money and this cash flow is coming in on a regular basis to you, and you're not dependent on income from a job. So this is the position where you can have freedom, security, and that peace of mind. So then here's where people get stuck. So you want financial freedom. So how do you get that? Well, you need to hire a financial advisor, right? That seems like the logical thing to do. And they look to financial advisors to produce financial freedom. But all too often, that doesn't lead to financial freedom. What we see is the financial industry, financial advising, financial industry, leading towards potentially riches, but not to financial freedom. And here's why. So when we break it all down, if we had to look at this all under one big context, just for the sake of discussion, really behind the screen of all of this, there's typically what happens is a conversation about your income, expenses, assets, liabilities. If they're comprehensive, they're going to be looking also at your protection, your estate planning, your insurances. And what they're going to say is, well, here is how much you have available to invest. They're going to talk to you about your asset allocation and your risk tolerance and your preferences for whether you're putting that in fixed assets or stock assets. And then you're going to hand over your money for them to manage your portfolio and decide the best investments for you. So the key to note is that they're being paid to manage your money. Now here's the concerns that I have with this model in that it does not help you achieve financial freedom. So first of all, it's based on getting your number, some amount of money that is a predicted amount that you will need in order to retire and be able to live off the income from your assets. Now, the future is completely unknowable. You can guess what you'll need, but it's not a firm, solid number to know exactly what your income needs will be in the future. It's also based on amassing net worth, riches, and that's accumulation, and then living off the interest. Now, anytime you have a pile of money with no added input and you want to make sure that that pile of money lasts indefinitely without running out, that's the definition of insolvency. You would never do that in a business, and I would recommend not doing that in your personal life either. Now, it also assumes that someone other than you is the best person to create your life and wealth for you. It also takes more of your money and puts it under the management, control, and stewardship of the banks and financial institutions rather than in your control and your stewardship. It's based on so many unknowns: taxes, inflation, the performance of the market and the volatility there, your life expectancy. All of these are unknowns, and yet they have to be factored into the equation of a financial plan in order to make all the numbers work out. And on paper, it can look perfect, but nothing actually works out the way that we plan and predict. It also is based on your acceptability of losing money. Anytime we talk about risk tolerance, it assumes that you're okay with losing something of the capital that you've created and produced. Also, it's narrowly focused in one asset class. So whether you're talking about bonds or stocks, typically this is a basket of mutual funds, it's still all within the market. It's still all in paper assets. It is ignoring the rest of the scope of investment assets, including businesses, real estate, commodities, and of course paper assets as well. Typically, somebody who's having their portfolio managed by someone else, this is passive investing. You're not focusing in areas that you know and control, and you have no performance over the companies that you're individually invested with. It also starts with you saving money, and it doesn't give you a path to maximize the ability that you have to put away in the first place and the ability of your money to perform the greatest feats for you in being available as an opportunity fund that you can invest in what you know and control. It also believes that your highest purpose is done at some arbitrary retirement date, and that when you retire, then you're just quitting your most valuable use and you're being removed from service. It's kind of like saying that at the time that you've accumulated the most knowledge and wisdom to serve the world the greatest and most profoundly, you're just going to step back, and that's the highest standard that you can look to live and achieve. It also assumes that dollars are either available to use today or in the future, but it forgets that dollars are not just meant to be consumed, but to be stewarded to create and produce more dollars. And it places intrinsic value and focus on the dollars themselves and not on human life value, not on your potential and the potential of the people that you are serving. The greatest value in the world is the contribution that you create and the world that you expand for others. It's not just the dollars. So instead of finding a financial advisor, here is how to take charge of your life and your money instead. So first of all, you need to get a cash flow system. That involves having a mindset to create wealth, efficiency on the dollars that you currently have, awareness of your cash flow, building reserves for an emergency and an opportunity fund, investing into cash flowing assets that you know and control, having all of the protection components in place so that you can't lose your wealth, and then creating wealth in every category of your life, not just your money, and passing that on to future generations. It requires you to trust yourself and to take full ownership and responsibility for the results that you create with your investment decisions, not passing the buck on to somebody else that didn't manage them correctly. That requires you then to understand your talents and abilities and how they give you a unique advantage so that you can focus your efforts into leaning into your edge, invest in your education, and then become personally accountable for the results that you produce. Now, you will have a team of financial advisors that support your cash flow goals, but the difference is that instead of them trying to have your money in their control, they're looking collectively to have more of your money and resources in your control. And the other difference is that they're not the one accountable for the results. You are accountable for the decisions and the results that you choose. Now, once you know what you want to invest in actively with your knowledge and control, you're going to find mentors and coaches who have done that before. So say, for instance, it's real estate, or maybe it's stock trading. This is going to be finding people who have been successful in creating investments the way that you want to and learning from them so you can avoid the pitfalls. Now, when we talk about your full financial team, now this is going to include a cash flow specialist, estate planning attorney, a business legal advisor, a CPA, a tax strategist, insurance advisors, and that's probably the minimum. You're going to have additional advisors on top, but the accountability comes back into your court and not falling on them. So this is why everything that we do is designed with one thing in mind, and that is your financial freedom. So for more on cash flow and money secrets, subscribe to our YouTube channel and follow us over on Facebook. You can also grab your cash flow generator to find out how to increase your cash flow with money that you already have. And I would also love to hear, what are your favorite ideas on becoming financially free? I'd love to hear your thoughts, so share them in the comments below. Thank you so much, and I'll see you next time.